Welcome back to Tony Forex Academy. Today's video is one of the most important trading lessons you'll ever watch because I'm going to teach you how to trade candlesticks from the beginning all the way to advanced understanding. If you ever opened a trading chart and wondered, what do these candles mean? How do traders predict market direction? Why do some traders enter trades at the perfect time? Okay, now this is a full course and I've made this exactly for you. You're a beginner and you're wondering, where do I start? Now, in this video, some of the things that you learn are what are candlesticks, how to read candlestick psychology, the most powerful candlestick patterns, bullish and bearish setups, how professional traders use candlesticks, a full beginner trading strategy. You'll also learn risk management, and then lastly I'll share with you some of the common mistakes that beginners make when starting forex trading. And most importantly, I'll show you how to actually use candlestick patterns to improve your trading decisions. So make sure you watch until the end because this video can completely change the way you look at the market. Okay, let's begin. Before we learn the patterns, we first need to understand what candlesticks actually are. Okay, so candlesticks are visual representation of price movement in the market, as you're able to see. Okay, now every candlestick will always tell us four important things, and what are those? The open, the high, low, and the close. Okay, now these four important things are prices. Okay, these four prices help traders understand the battle between buyers and sellers. And how do they do that? The open price tells us where price started, the close price tells us where price ended. Okay, and then the high price shows the highest point reached, and then the low price shows the lowest point reached. Okay, if the candle closes above the opening price, we get a bullish candle, which is usually green, as you can see in the figure I've shown here. Now, if the candle closes below the opening price, we get a bearish candle, usually red. Now, candlesticks are important because they show market psychology, how traders actually are thinking. Okay, now these candlesticks, they will always reveal fear, greed, momentum, rejection, and indecisions happening in the market between buyers and sellers. Okay, and once you learn to read them properly, the charts start speaking to you. Okay, I repeat, once you learn these candlesticks, once you learn to read them properly, the charts will start to speak to you. Okay, now let's break down the structure of candlesticks. A candle has a body, it has an upper wick and a lower wick. Okay, the body shows distance between the opening and the closing price, and then the wick shows the rejection area where price moved but failed to stay. Here is what traders look for. A large bullish candle means buyers are very strong, and a large bearish candle means sellers are dominating the market. Now, the long upper wicks shows rejection from buyers. I repeat, long upper wicks shows rejection from buyers, as you can see. And then the long lower wicks, they show rejection from sellers. And then small candles usually mean indecision in the market. Okay, that is between buyers and sellers. And understanding this psychology is the foundation of price action trading. I repeat, understanding this psychology is the foundation of price action psychology. Now I'll start talking about every candle and their names. We have a few. Okay, let me start with the doji pattern. Okay, so as we start, we'll move our first candle and we call it the doji. As you can see here, a doji forms when the opening and the closing price are almost equal. I repeat, a doji pattern forms when the opening and closing price are almost equal. This means buyers and sellers are fighting equally. And then it also means that the market is undecided. Okay, when you see a doji pattern after a strong uptrend or a downtrend, it can signal a possible reversal. Okay, but I want you to remember one thing: a doji candle alone is not enough. You always need confirmation from the trend. You always also need confirmation from the support or resistance. Okay, now let's talk about the hammer pattern. This is one of the most famous bullish reversal patterns. It is called the hammer. Okay, a hammer usually appears after a downtrend. I repeat, a hammer pattern or a hammer candle, it usually appears after a downtrend. Okay, and it has a small body, a long lower wick. Okay, these two are very important. You have to remember that a hammer, just the way a hammer looks, a small body and then a long lower wick. This tells us that sellers pushed the price down strongly, but buyers came back with power and rejected longer. When buyers came back with power, they rejected lower prices. Okay, so this is a sign that buyers may start taking control. Okay, the best hammer setups happen at strong support zones. Okay, you need to understand that. Okay, now another candle that I want to talk about is the shooting star. So what is a shooting star? A shooting star appears after an uptrend. It's a bearish version. Okay, and it always appears after an uptrend. You watch carefully and look at the picture that I've shown here. Okay, it has a small body, it has a long upper wick. And now this one, what does it tell you? This shooting star candle pattern, what does it tell you? This shows us that buyers tried pushing price higher, but sellers rejected the move aggressively. And then this one can always, if you're smart, you can read this, and this can be a signal that a bearish reversal is about to occur. So professional traders love using shooting stars near resistance level. Understand that. As a trader, try to look at a shooting star forming near resistance level, because it will give you a bearish reversal. Okay, now another candle pattern that I want to talk about is the bullish engulfing pattern. Okay, this one is a double candlestick pattern. Okay, it is the first one because the first one is the bullish engulfing pattern. Okay, and then how does this happen? This pattern happens when a small bearish candle forms first. Okay, remember there are two. So a small bearish candle forms first, then a large engulfing bullish candle completely engulfs it. Okay, you look at the second candle after the first one. Okay, so what does it tell you? This shows that strong buyer momentum are entering the market. Okay, it is one of the strongest reversal signals in forex trading. Okay, but again, the location of this matters. A bullish engulfing pattern at support is far stronger than one appearing randomly. Okay, remember this: a bullish engulfing pattern at support is far stronger than one appearing randomly. So meaning, as a trader, you have to mark your points. You have to in this case at least look at the support and resistance level to at least know, position yourself and know when you take your entry and you know when to take your exit. Okay, so another candle that I want to talk about is the bearish engulfing pattern. So how does this occur? This is the opposite of the bullish engulfing pattern. Okay, it forms when a small bullish candle appears first. Okay, then a large bearish candle completely engulfs it. What does this tell us? This tells us that sellers are stepping into the market aggressively. Okay, and then the best setups appear. As a trader, you need to position yourself carefully in the market, and then you put your setups at the right points. Okay, so the best setups will always appear near resistance level after an uptrend. Remember that the best setups will always appear near resistance levels after an uptrend. Now let me talk about another candle, the morning star pattern. So this is a 3-candle bullish reversal pattern, this morning star. Okay, it usually forms after a downtrend. Remember this, it usually forms after a downtrend, and then the pattern consists of a bearish candle, a small indecision candle, a strong bullish candle. This pattern consists of 3 things: a bearish candle, a small indecision candle, a strong bullish candle. What does this tell us? This tells us that sellers are losing momentum and buyers are beginning to take control. Alright, now I want to talk about the evening star pattern. This is the bearish version of the morning star. Okay, as you can see, it usually appears after an uptrend. This evening star pattern, this evening star candle, it usually appears after an uptrend. Now this pattern signals weakening buyers and growing seller pressure. Okay, so many traders use it to prepare for possible sell opportunities. As a trader, you need to position yourself carefully and understand these candlesticks patterns. Okay, so before you take your entry, you have to consider where does this evening star candle forms. Okay, now let me tell you the biggest secret about candlesticks. Okay, something that most beginners never understand. Candlestick patterns alone are not enough to make consistent profits. I repeat, candlestick patterns alone are not enough to make consistent profits. Okay, this is where most traders fail. Then the professional traders, what do? Professional traders or the pro traders or those who have made it in this industry, they combine the candlestick patterns with what? Market structure, trend direction, support and resistance, liquidity, very, very, very important, confirmation, time frame analysis. Okay, for example, when you see a candle like a candlestick like the ham pattern in the middle of nowhere, okay, a hammer pattern in the middle of nowhere, it's just that's a very weak candle. Okay, but a hammer pattern at a very strong support level inside an uptrend usually becomes very powerful. So what does it tell you? Location matters more than the pattern itself. Remember, location matters more than the pattern, the candlestick pattern itself. So what are some of the best time frames for candlestick trading? Okay, let me talk about the time frames, because many beginners make the mistake of trading very low time frames. That is very wrong. Here's the truth: 1 minute charts are very noisy. 5-minute charts are fast moving and emotional. Okay, and you want to avoid emotions while trading. And then the 15-minute charts are okay for intraday traders. Okay, but 1-hour charts are much cleaner, and then the 4-hour charts provide strong setups. Okay, try to use higher time frame for direction. So the daily chart will give you the strongest confirmation. Okay, now if you're a beginner, I want you to focus mainly on 2 time frames: 1-hour time frame and the 4-hour time frame. Okay, why? I repeat, 1-hour time frame gives you a much cleaner setup, and the 4-hour time frame provides a stronger setup. These 2 charts reduce emotional trading and will improve your decision making in trading. All right, so what strategies are you going to deploy as a beginner? Now let me show you a simple candlestick strategy that you can use immediately as a beginner. Okay, now we have two: the buy setup and the sell setup. Let me start with the buy setup. Step 1, identify an uptrend. Okay, step 2, wait for price to pull back to support. All right, and then step 3, look for bullish candlestick formations like the hammer, the bullish engulfing, morning star. Okay, these 3, remember step 3. And then step 4, enter the trade after the candle closes. All right, step 5, place stop loss below the wick. Remember, stop loss is part of your risk management, so place your stop loss before the wick. That is step 5. And then step 6, target the next resistance area. This is a buy setup. As a beginner, use this as your strategy. You can try it. Okay, and then for the sell setup, this is for those want to take sell positions. Okay, step 1, identify the downtrend when price is moving down. Okay, and then step 2, wait for price to retrace into resistance. Okay, meaning you had marked your resistance level, so wait for price to retest that zone. And then step 3, look for this bearish confirmation from this type of candles. Okay, look for the shooting star, bearish engulfing, all right, and then the evening star. Once you see this forming near your resistance level, step 4 comes in: enter after the candle closes. Then step 5, place stop loss above the wick. Right, then the last step is take profit at what level? At support. So the most important part of trading also is risk management. Okay, now listen carefully, because this section can save your trading account. Even the best candlestick patterns can fail, and that is why risk management is more important than finding perfect entries. Remember to risk per trade at least 1% to 2% of your account balance. I don't know the account you're going to start with, but at least 1% to 2%, no more than that. Never risk too much on one trade. And then avoid emotional trading, avoid revenge trading, and never over leverage your account. A good trader will focus on protecting what? Capital first. All right, so as a beginner, you'll make mistakes. Remember, Forex is a journey. So here are the biggest mistakes that most beginner traders will likely to make. Number 1, trading every candlestick pattern they see. Wrong. Don't do that. Number 2, ignoring trend direction. Do not ignore these trends. All right. Number 3, you're trading without a stop loss. You will lose your account. You'll blow your account. Okay. Number 3, over trading. Number 5, entering trades too early. Wrong. Number 6, trading emotionally after losses. Do not revenge trade. You lost that trade, let it go. Take a step back, breathe in, walk, re-strategize. The market will always be there. Okay, so do not trade emotionally after losses. Now remember, patience is one of the most powerful skills in trading. Patience is key. This is a journey. All right, so candlestick trading is not just about patterns. I need you to remember this carefully. It's about discipline. The market will reward patience, consistency, and emotional control. So most traders lose not because they lack strategy, but because they lack discipline. You must learn a few things. And what are those things that you need to learn as a trader? You need to learn to wait for confirmation. Try to learn to control your emotions. Try to follow your trading plan. Do not trade randomly. And also avoid greed and fear. These two things are very bad. So remember to learn to wait, control your emotions, avoid just random trading, without a plan, avoid greed and fear. And that what will separate you from gamblers, and you become a professional trader. All right. So, guys, that was your beginner course on how to trade candlestick patterns. And if you learned something valuable from this video, I need you to like this video, subscribe to this channel, and then you turn on the notification. I'll be posting more videos. And also don't forget to comment, at least to tell me which candlestick patterns do you use the most. And also follow Tony Forex Academy on this channel, Telegram, TikTok, Instagram, Facebook. Links for all these are on my are on the bio. All right. So I need you to remember that trading is a consistent journey if you want to make it. All right. So more trading content is coming very soon. Remember, trading is not gambling, and trading is just a skill which requires your patience, have the right psychology, and be disciplined. Thank you for watching, and I'll see you in the next video.